I'm Charlotte McLeod with the Investing News Network, and here today with me is Jayant Bhandari, analyst at Anarcho Capital. Thanks so much for being here today.
Thanks for having me, Charlotte.
And we're here today at Minds and Money London. It's the second day of the show. I wanted to start by asking you how you think the mood feels at the conference. What vibe are you getting from people who are here?
Well, clearly, Minds and Money has been becoming a smaller show as time has passed by. And I think this is a reflection of the depressive expectation from the mining industry. So over the last 8-9 years, I have seen a smaller and a smaller audience every year. And as a result, this year it has been a smaller audience as well.
What news have you been hearing from people? Is there any themes that you've seen coming up in conversation here?
Well, the people who come to these conferences, of course, are optimistic, and I think they are rightly optimistic because exactly when blood is running in the street, when people are not interested in buying any of these companies, that's where the best value emerges. That's when you can invest with the least amount of risk and for the highest amount of upside. A lot of people who chase as in herds don't like investing in situations like these. But for me, this is really the best time and opportunity to make money.
Let's hear a little bit about where you are putting your money currently.
I am almost fully invested, Charlotte, and I have actually done quite well investing in good companies, good projects, and good managements. And there are a couple of companies here at the show who I like, and I think they have a bright future because they probably have bottomed out and there's only upside that I'm looking forward to.
Is there names that you want to mention here?
Sure, yeah. I can mention one company which is Maritime Resources. MAE is the ticker, and it's trading at around 7 cents. It did its last financing at 10 cents, and there was a hostile takeover offer for Maritime Resources from Anaconda Mining, and Anaconda Mining had offered half of their share for Maritime. Based on that, there's a 50% upside in owning Maritime Resources. But at the same time, Anaconda Mines, which is trading at 20 cents, is cheap anyway. So I think there is a 2 or 3 layers of upside in owning Maritime Resources and Anaconda Mining. There is another company called O3 Mining, which is actually the biggest part of my personal portfolio. The ticker is OIII, and I quite like the management. I quite like the projects in Canada, and I think it's very well protected. The downside risk is very well protected in that company. And it's a company that I have taken a large position in.
So you mentioned 2019 has gone well for you. We're now approaching 2020. Would you anticipate changes in your portfolio as we head into the new year, or it will be staying pretty much the same?
I mostly focus on investing in good companies. Good management is my primary demand from any company. And if I have good managements and if they have decent projects and if I see value, I invest in them. And as a portfolio, I do quite well focusing on the key fundamentals, things that support my downside risk and things that already give me an upside. As a portfolio, there will be volatility, but eventually I do well by investing in such a portfolio.
So for you, it's not so much the commodity that matters, it's these other factors that you look at.
I don't really care about the commodities. If there is an uptick in commodity price, that's free cream on the top of the cake for me. I'm mostly interested in the cake. And if I make more money because commodities that I'm investing in go up, then I'm more than happy about it. But my focus is on valuing these companies based on spot price of those commodities.
So at an event like this, we do end up hearing quite a bit about gold and things like that. You mentioned kind of offline that you're not interested in gold, really. What's the reason behind that?
I'm not interested in gold. I buy gold, and I strongly recommend people to buy gold, particularly people who are not good at investing their money. Gold is becoming extremely important. We are no longer living in a capitalist economy anymore. The third world countries are facing huge problems. As I was telling you earlier, I go to the Middle East quite often, and Middle Eastern countries are suffering economically because they imposed sales tax recently. And you can see a lot of problems in Bolivia, in Peru, in Chile, Hong Kong, and this will lead to stagnation of a lot of economies, and that is where demand for gold will kick in even more than it has so far. So by itself, I'm happy with gold, but I'm not going to put a higher expectation of gold price in valuing gold companies. That's where I differentiate between gold and gold mining companies. Gold mining for me is a business, and it should work at a spot price of gold. Now, if my expectation of gold price gets triggered, then I'm more than happy with that, but that will be the cream on the top of the cake for me.
Maybe you could talk a little bit more about your recent travels and what you've been seeing in the places that you've been going to.
Well, I have recently been in Hong Kong and Abu Dhabi, and I was watching protesters, and I was also for about a week in China, in Changsha. In Changsha, which is a 7 million people city, I was probably the only non-Chinese that I saw, that I came across in those 1 week I spent there. It's a beautiful city, very energetic city, a lot of young people, extremely safe, very nice people, and I love China. At the same time, I'm not happy with the fact that Xi Jinping, the president of China, has been increasingly heavy-handed and arrogant about several things. He has picked up a fight with the United States in terms of trade. He has been interfering in Hong Kong to a certain extent. At the same time, I was also in Hong Kong for a few days, and I watched protesters at close distance. And Hong Kong stays as my favorite country even today. I like the protesters, I like what they are doing, and I'm also quite keen on the people who are against the protesters. They both operate in a very civilized way. And that makes me very euphoric about the future of Hong Kong. It will go through short-term turmoil, and probably these protests will continue into the near future, even into the middle term. But Hong Kong is made up of beautiful people, and it's a great place to live in. And I continue to go to that country.
Just going back to the trade war, it's something that we've been talking with you about for the past year or so. And the last time we spoke, you said it's gone on longer than you expected. It's kind of a mess. What are your thoughts right now, especially after your trip?
Well, I think given the fact that Xi Jinping is arrogant, and in Asia you have to save your face, it will be very difficult for him to pull back on this trade war. But I think he clearly recognizes that US has an upper hand in the trade war. China is not as strong and as rich a country as he thinks it is. And he has pretty much used up all the cards he had. He has left with not much more than he had to trouble the United States. United States can put a lot more restrictions on China and actually destroy Chinese economy if the US wants to. So eventually China has to give in. Now Trump has to find a way to let Xi Jinping give in a bit without losing his face, and that's where the trick is.
Really? So we have this going on right now. We have unrest in other parts of the world. If you're an investor right now, how should you be reacting to these circumstances that we see in the world?
Well, I am actually very excited about East Asia, and I have talked with you about it many times. I love all of East Asia. Japan is the best country on the planet by far. Look at Taiwan. It's socially stable, economy is growing well, and people extremely, extremely civilized. The same is the case in South Korea, Hong Kong, and Singapore. These are great places to keep your money. These are the great places to invest your money, and they are very stable. Now, of course, China is my best country among the third world countries. It is also the growth engine of the world economy. And I think China will continue to do well, except for a short-term problem. Maybe for a couple of years, it will have some problems, but it is my favorite country. I see China as the future of humanity. So I'm very excited about East Asia. I think the rest of the world is becoming unstable. The Western countries are becoming unstable. They are economically becoming stagnant. And the third world, except for, of course, for China, is falling apart. You see problems in a lot of the third world today, in Pakistan, in Bolivia, in Chile, in so many other countries. And that is where people will pay more attention to protecting what they have rather than growing what they have. And protecting what you have usually leads to investing in properties, gold, and passive investments. Properties around the world are very expensive, so it's hard to imagine that properties can go up even much higher. And that is where future of gold looks very interesting to me.
Right. I was going to ask you if you were going to be putting your money in one of those countries you mentioned at first, what would that look like? Would that be like real estate and things like that?
I actually do invest in broader market in Hong Kong and Singapore, and I would love to look at companies in Japan as well. These are stable jurisdictions, and I also invest in a lot in China because Chinese companies do offer me a lot of upside with very good downside support. Now, what happens, Charlotte, is that a lot of people in the West only get a bad impression about China, and they come to believe that Chinese companies are mostly scams. But you see enough scams happening in Australia and Canada as well. If you can isolate companies in China listed in Hong Kong, for me, they have offered me over the last 10 years great opportunity to make money, and I have actually been successful at it.
I think people may also, in the Western world, not have an idea of where to start, where to look, and how to actually enter those markets. Would you think that as well?
Actually, the thing is that Hong Kong Stock Exchange is among the biggest stock exchanges on the planet. It is very easy to trade in Hong Kong. There are a lot of Chinese companies that are listed in Hong Kong. They would rather list in Hong Kong than in China. And that gives you a very easy way to invest in China. And if I can mention a broker, a broker is Interactive Brokers that actually allows you easy way at a low commission to invest in Hong Kong.
Okay, that's great information for investors. Are there any other ideas you would mention for people to be looking at right now? I think that's something new that people may not be thinking of.
Well, I cannot think immediately about any company than what I have mentioned. But I think people have to be very careful about problems brewing up across the third world, and they should avoid investing in the third world. India is imploding, Brazil has its own problems, Bolivia has its own problems. I am mostly interested in investing in the developed world, but primarily keen on East Asia.
All right, I think we'll leave it there for now. That was great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Jayant Bhandari.